Welcome back. You're still tuned into Power Breakfast on CNBC-TV18, and let's now talk about some individual stocks which could be in focus today. The board of Paytm is going to consider a buyback in their board meeting, which is scheduled on the 13th of December. So Abhishek is joining us right now. Abhishek, good morning. Take us through the details.
Good morning, Pavitra. So, as you mentioned, Paytm's board is considering a buyback option for which they are going to hold a board meeting on 13th of December. Just to alert our viewers, the cash and equivalent component in the balance sheet over the last 3 quarters has been north of 9,000 crores. So, Q2 FY23, it was around 9,182 crores. Q1 FY23, it was more than 9,400 crores. And for FY22 as well, it was around 9,270 crores. So, the net worth is around 13,564 crores. SEBI rule says, for tender route buyback, you have to have 25% of net worth that can get bought back. While open market, it can be 15% of net worth. So the calculation shows that via the tender route, they could have a buyback of 3,391 crores. While via the open market option, they can have a buyback of around 2,034 or 2,035 crores. Just to alert our viewers, the IPO was priced around 2,150 and the CMP is around 508 per share, which is a wealth destruction of more than 76%. Back to you.
All right, Abhishek, thanks a lot for filling us with all of those details. In fact, in just the past 20 days or so, the stock has also lost 20%. So that is on Paytm. But moving on now to FMCG maker HUL, that has expanded its footprint into the health and nutrition segment with the acquisition of Aziva and Wellbeing Nutrition. Shilpa is here with the details. Shilpa, how much did HUL spend on these?
Now, HUL is the latest FMCG major to foray into the health and well-being space. Now, this is with 2 strategic investments. Now, the first one is a 20% stake in Wellbeing Nutrition for 70 crore rupees. And Wellbeing Nutrition is a lifestyle protein, hair, beauty supplements brand that was founded in 2019. And it has a current run rate of about 50 crore rupees. And the second one is a plant-based protein and wellness brand called Aziva. And this is happening in 2 tranches. The first is a 51% stake now for about 264 crore rupees. And the remaining 49% will be 36 months from now at a pre-agreed valuation. Now, Aziva had an annual turnover of about 124 crore rupees in FY22. Now, HUL will have a board representation on both these companies, while the current management will continue to run them. And while these deals are smaller in size, HUL sees a large opportunity of 30,000 crore rupees in this space about 4 to 5 years from now. Analysts are also upbeat about the fact that HUL has a proven track record of significantly scaling up smaller acquisitions. Now, VWash and Indulekha are cases in point. HUL has also said that it is looking to bring some of its brands from the global health and well-being portfolio to India at an appropriate time. And remember, HUL is just the latest company in this space. Now, we have seen other FMCG majors betting on this industry too. For example, Imami picked up a 19% stake in protein and nutrition brand called True Native. Marico also has Fitify, which is a health, nutrition, wellness brand that it had launched in 2019. Tata Consumer also forayed into this space with health supplements brand called GoFit that was just now in September. Nestle, ITC are also eyeing this space. Now, this category has immense potential, like HUL said, 30,000 crore rupees about 4 to 5 years from now. Back to you.
Shilpa, thanks a lot for that. So definitely a hot category, and the space has really sort of picked up right after the entire COVID pandemic through so much focus on health and well-being. But with that, we're going to get you some important commentary as well. This is from one of India Inc.'s biggest voices at the CII Global Economic Policy Summit. Uday Kotak weighed on the lack of fresh Capex by corporate India and the health of the Indian economy. So listen in to what he had to tell us.
Global situation thanks to COVID and Ukraine has made a lot of people in India circumspect. In a 24/7 news, if you keep on getting barrage of bad news from around the world, it's got to affect your psychology and your mind. And we are not immune to this. I remember in 2008-9, I took a call. Don't read the Financial Times and the Wall Street Journal. It makes you very negative about the world. The fact of the matter is 24/7 digital world, what happens around the world affects us. But we got to look at our facts. We did a survey in Kotak of 900 corporates and SMEs recently, first week of November. We found 66% of the companies across corporate to SME having capacity utilization of 80% or more. But only 15% of the total were ready to invest for new Capex. A growing economy needs to have a current account deficit, and we keep on having a current account deficit for a long period of time. But at some point of time, we must be Atmanirbhar. Even this year, we will be $120 billion negative current account deficit. Means our profit and loss account in foreign exchange is we're earning less than what we are spending. Therefore, we need to get Atmanirbhar on our current account. And second, I understand fiscal deficit consolidated has gone up worldwide thanks to COVID. And India is at consolidated, give or take, around 10% of GDP. We need to have a credible, consistent, resilient plan that we will get better on P&L account, even on fiscal deficit.
All right, that is an important word coming in from Uday Kotak. But with that, we have to get into a short break now. When we come back, we're tracking all of the cues